Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. More records have been set. Gold and silver royalty stocks are doing well, and he checks out crude and the U.S. dollar. Market historian Bob Hoye comments on the seasonality of gold and silver. How do today's market conditions compare to some keynote moments in the past? And whether we'll refer to our time in history as the Roaring Twenties, just like they did 100 years ago. Publisher of VRTrader.com, Mark Leibovit, gives us his insights into the Dow, small caps, gold price manipulation, Bitcoin, steel, copper, and the generational change in attitude towards investment. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can also find him on Twitter at Charts by Ross. Welcome back to the show, Ross.
Good to be with you, Jim.
Ross, I know it sounds like a broken record. Kids, that's a thing made out of vinyl that spins on a turntable and you put a needle on it. But more record highs.
Yeah,
set.
Pauses and records, and that's about all that happens these days. It's just always a question of how deep will the small corrections be between these new highs. And here we are at 4,000 on the S&P to close off the week, a number that, wow, I hate to talk about where the market was when I started in the business, but now, here we are, April Fools, and this is no fool. We're now entering what would historically be the second best month of the year. The first one, number one, being November, which is when you come off the bottoms. And, you always remember the most money is made not in the sale, it's in buying well. So you want to buy as you're coming out of a trough, or you want to buy a correction. I'm not one that likes to buy breakouts. And, even if you had bought the breakouts in the market back in January, you had good corrections in February and March to be a buyer. You had another one at the beginning of this week. So, find things that you like and then buy the corrections along the way, because they inevitably do happen. And, looking at, the sectors that did peak out here a few months ago, the technology have had a good correction, and they're starting to base out and turn. You take a look at the environmentally friendly stocks, the Ballards, the Fuel Cell Energies, First Solar, Boralex, all had good 5 to 6 week corrections to the downside. And they've all based out nicely here this last week and a half, and starting to turn the corner. So, you've got these items back to better valuations than they had. You've taken a lot of the weak hands out of the market, and with this turn, you can be in with a reasonably tight stop and let the market show just what it's capable of on the upside. So, remember, there's always another train to catch, and you got to be patient and wait for opportunities to come along that look attractive.
High-tech stocks, are they still booming?
You're starting to see strength come back in. You look at things like the XLK, or the buoyancy is returning to the sector there. Was interesting, the Russell 2000 had been outperforming the NASDAQ significantly in the fourth quarter of last year and into the middle of February. and it's now giving back ground. So, and what that's showing us is that these value stocks, which had come back into their own, probably got ahead of themselves. The NASDAQ has been showing some life right here. I would think that this correction on the value group, if it probably now they're continuing to stair step higher, but at a lower pace than what we're seeing over in the NASDAQ 100. But I would suspect that in the next few weeks here, you'll start to see the value group come back to life again. And, the Russell 2000 is a nice way to participate in that. So this kind of rotation that we're seeing right now, it's similar to what we saw back in sort of April of 2001, or you go back to 1997. There were some periods where the Russell was starting to come to life, had a bit of a pause, and then had a second move to the upside. So I think that we're in the stage where we might be looking for that to happen once again.
How are royalty stocks doing?
Royalties, well, they very well, bottom line. You take a look at Franco-Nevada, you look at Royal Gold. We had, a week or two ago, gold and silver were up to some resistance levels, and we were looking for a break. And as of Tuesday, we had oversold signals on both gold and silver. And typically, the types of signals that we look for, when you get a concurrent one in both silver and gold, and in the case of what we have here, it's a sequential setup we look for. When you've got consecutive days where you're closing below 4 days earlier. And any time that we see gold and silver simultaneously have these setups, and you average maybe 3 to 4 per year, you get a really nice reversal. And as of Tuesday's close, silver was under $24. We got the signal there. And this week, in just a matter of 48 hours, silver's up $1. Gold had been at $16.83 when we got the signal, and here we are up at $17.30. So really nice oversold conditions providing a lift, and they've got back to initial resistance. But I think with the move we've seen off the bottom, you might be looking at silver working its way maybe more, closer to $26, probably the gold market up towards $17.80. But as we started off with here, the royalties, Franco and Royal Gold, both have made higher highs than they did a couple of weeks ago. So those two really are sort of leaders of the pack here. And this reversal off the bottom in the metals was right in tune with an overbought in the U.S. dollar index. So the dollar index started to come off its highs. The euro had become oversold, and it's getting a bit of a bounce here. I think there's probably more to be had on the upside on the euro and downside on the dollar in the short term. And we'll see if we can get some good signals there.
What's going on with crude?
Crude got that nice oversold around 57 10 days ago. We'd been looking for it to move into a consolidation zone, and it's doing that. The closed off the week back around 62, and the stocks, we'd been looking for the overbought levels there for the stocks to give back 7 to 10% of the move off the highs and correct 50% of the run from the January low. That would be the most recent run-up that it had. And pretty much across the board, we've seen these energy stocks base out at those levels and start to make a bit of a turn. I think it's premature to say that the next leg is ready to start, but I think there's not a lot more left on the downside, even if they do settle back to test the support. Energy stocks, I think, have still got a long way to go on the upside, so that'll be another one that you look to be a buyer of the dips.
Ross, thank you so much for being on This Week in Money.
Pleasure to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on Twitter at chartsbyross. Coming up, Bob Hoye, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to This Week in Money, Bob.
Yep, and this week we're at it's Thursday, so rather than our usual Friday, but hey, one day in the markets is as interesting as any other day, and these days have been fascinating.
And of course, our listeners will be tuning in on Saturday, but we don't talk about day-to-day stuff. Bob is a market historian, and I've asked you things about, did the ancient Phoenicians and Romans have stock markets? Did they?
They had financial markets, mainly interest rate items and mortgages, and they had a way of financing trade goods. And actually, there's an instruction there because 2,000 years ago, the great Roman writer and thinker Cicero wrote that if there was a financial crisis in the eastern provinces, meaning, kind of Phoenicia and whatnot at the eastern side of the Mediterranean, that it would eventually hit the financial capital at Rome. And this is a classic. We've got this going on now. March the 1st, they announced the troublesome trio where Turkey, Brazil, and South Africa central banks were suddenly discovered to be having a liquidity problem themselves. And then just last week was that Argentina confessed that they didn't have any money again. So these are lesser countries, and the pattern in the past has been, well, now what I would like to see in here is some officials, like the World Bank or the IMF, say that there's no problem because it can be isolated, because these things, when they get going, they will eventually hit the financial centers, the important ones such as London and New York, and that typically can be in the fall, but we can go on about that later on in today's show.
Bob, as you know, we like to answer listener questions on your weekly show, so we'll answer a listener question here on This Week in Money. The question comes from our listener, Mike. Bob, since I've been paying attention to gold and silver mining shares, it seems as if there are only a few really good weeks for miners each year, and the rest of the year is either sideways or down. Does it seem accurate to say that if you miss those few really good weeks, you're not likely to make money and you just need to stay invested year-round unless you're a very good and experienced trader? Thanks, your friend, Mike.
Yeah, Mike, that's a good one. Gosh, we can cover that on both in a couple of ways here, because I've been in mining stock promotions out of Vancouver. I mean, one I worked on full-time for a couple of years, and others I've participated in and been a principal and stuff like that. So anyways, yeah, the game really is, it takes a while to build a company, get the right property in it, and get started exploration on it. Drilling is good. And then if you're in a decent metals market, you can have a good play in the stock. And but then, like all things, it'll culminate in a rush. And unless you've learned to sell, it'll go right past you. But then also, even in participating in somebody else's stock, or you got to watch the same thing. So this is where, Mike, it all comes down to really good technical tools to catch the volume. I mean, last year there were a couple here. One of them was Teuton, where $80 to, I think, $4.25. But as it was going up, there were a couple of overbought instances on it where one could use to lighten up on stock, and then, but it did one of those almost straight up moves, because all of a sudden everybody got onto it at once. And then this was actually the best was in before the drilling program had really started generating some results, and they had something like a 20,000 meter drill program, and the stock has not reached that high since. So no, it's very interesting game. I think there's a lot of money to be made in being in the right exploration stock, and the trick is to get there. And it's been my background. I originally took a degree in geology and geophysics and did work in the field for some junior stocks, and this is what got me into the business, because on the first one, I saved up a bit of money and bought my first stock and made money on it. So that's what I said. It got me into the investment business a long time ago. Good question. Thanks.
Bob, are investors, or at least the people in charge of making investments, getting a little smarter here? Because if you remember the 2000 .com crash, that was caused because everybody piled into technicals or into high tech, ignored everything else, and there was a crash. This time around, I've noticed a year ago, everybody was piling into high tech and so on, but slowly they've rotated into industrials, and the Dow index goes up, and the NASDAQ, which is mostly high tech stuff, goes down. Are we a little smarter now about where to put the money, and you keep a closer eye on it? You can't just invest on one sector and expect it to do well forever.
Yeah, that dot-com bubble that blew out in March of 2000 really was extraordinary. I don't recall ever seeing a market whereby all of the brokers, all of the research were unanimously bullish. And then afterwards, there was even an investigation as to how could this have happened. And then the authorities then encouraged what they called independent research, which was great for us at the time because, hey, we'd been independent research for some time. So that was an extraordinary one. This one, as it completes in here, there's been rotations from insanely straight up items like that GameStop and the Bitcoin straight up and then hit very, very hard. But our view on the senior indexes goes back to a piece that Ross came up with in January that noticed there was a certain percentage increase in the New York Stock Exchange margin debt, and that was reached in November, that percent gain, and in which case the research was that some 6 months later the S&P could peak, and 6 months from November counts out to May. So this has been an idea that we had. And then also there's the old saying about sell in May and go away. There's a whole lot of items out there, industrial commodities, and things can do well. So our view has been that the action in the senior stock indexes could be favorable into about mid-year, giving ourselves some elbow room. And then after mid-year, we'll start looking at the seasonal declines. You can have, for example, lumber has been spectacular. It can do a seasonal high in June. And then its seasonal low is in October. And this has worked for quite well for the last few years. And then you can look for seasonal highs for copper in March, and then another one in July. and then lows in November. Crude oil seasonally is kind of weird during the summer months, but usually you can have a low in January, February, and sometimes they can be dismal lows. So the theme is that the markets could be okay through to mid-year and then not okay. So our advice on these rotations have been on as groups or individual stocks get overdone to the upside, of which we have very reliable technical measures on that, has been to lighten up on the party items. And then the ideal thing is to have a fair amount of liquidity by August, because there's a possibility of a liquidity crisis in the fall. Now, one of the things that's going on is the talk about all the money and credit and everything that the new U.S. administration is putting in. And admittedly, it's a lot. It's crazy amounts, actually. And the conclusion has been that inflation is going to happen, the old 1970s type of inflation. And what we see is that recently copper and other base metals made technical excesses, the highest since the cyclical peak in 2008. Recently, crude oil made a pretty good technical high. The other thing is that Treasury bills rates are trending to zero. If it was 1970s inflation back again, the T-bill rates would be going straight up. So I don't think the old inflation that commodity bulls live in isn't going to happen. Our theme is that this could be the year when a great financial bubble could culminate, and what you need for that is straight up action, which we've been getting. And then your next thing you know, the season for when contractions are discovered. So there's the U.S. dollar also is worth mentioning. It got sold off really hard into January, when that month can see a seasonal low, and it became oversold at 89 on the DX, bounced back, and then that's when we started looking for a sideways trading pattern, building a base for a few months, and then the base building would complete with the DX rising above its 20-week exponential moving average, which was done on March 1st. So that completed the base for the U.S. dollar, and it's now at 93, and on the chart, just eyeballing it, Jim, that going into the 94s would set the uptrend. And that would likely be involved with a lot of disappointment on the inflation bulls and commodity bulls and stuff like that. So everything, Jim, is coming together, suggesting that we're on a path to a liquidity crisis. So if one has liquidity in one's account, is a good thing. Now, here's the other thing that is a mystery in this kind of a market, where there are there have been bids all over the place for everything, and that implies a lot of liquidity. But the problem is that these bids, many of them are speculative and based upon leverage, in which case, when the price action fails and turns down, all of a sudden that liquidity is not liquidity, it's borrowed money that's got to be serviced, and then that's where the margin clerk comes in. So we see a path.
Is there any safe haven when you have a financial condition like that?
oh yeah, the senior currency, which is the U.S. dollar, and it's acting well. And we wouldn't go to treasury bills because they're going to go to 0%. So ideally, and it's hard to find them, somewhere around 4-year term, good grade corporate bonds. You're going to get a better yield. You're not going to get destroyed with a liquidity problem. And also, for Canadians, the U.S. dollar going up, and you're sitting in some U.S. Good corporates, you're going to make some money out of that as well. So, and then the other one is that in a storm, gold itself is always a good insurance. But we're apprehensive of gold stocks. They could be hit with a major sell-off in the senior stock index possible in the fall. So we got out of the gold stocks and actually advised both traders and investors in July to lighten up on the sector because the returns had been great and the technical excesses were being accomplished. So, yeah, it's going to be interesting.
We'll have more with Bob Hoye when This Week in Money returns.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Bobby Hoye, that radio sensation that's rocking the nation. Flappers, Charleston, Jazz, Raccoon Coats, 23 Skidoo, kiddo. Are we going to see the Roaring Twenties version 2.0?
Good question, and that was part of the headline where they're looking at the post-pandemic return of the Roaring 2020s. Actually, that's a good line because during the 1920s, it was called the Roaring 20s, and Roaring 2020s is very good. The party is culminating. We've reached trading excesses like you wouldn't believe. So the way now is to look for the exit, and there's other positive headlines as well.
A swift collapse. I don't know if this is positive. There's a swift collapse of a company built on debt. Is that what's going to happen to a lot of companies that have been borrowing money to buy back their own shares? Could this come back to bite them on the butt?
I think so, because what we're looking at here is technically we've had measurable excesses on the upside. And then the other is that with, anecdotally, you've got sensational headlines. So just in the last week, we've had headlines about how strong certain sectors are, like people looking for the return of the Roaring 2020s. And at the same time, you're coming out with disaster headlines about collapse of major hedge funds and stuff, like this one of a company built on debt, and then you've got one, Nomura warns of significant loss from a U.S. client. Oh, we've got another, an ex-Tiger Asia founder triggers a $30 billion margin call. You know, I mean, this is big money. And then another one about billions in secret derivatives at the center of Archegos blow-up. Oh, here's another one, Jim. Goldman Sachs does a U-turn on Huang, which is part of one of these highly leveraged guys out of Asia, and all of a sudden, Goldman is getting concerned about margin calls. So we're seeing measurable excesses technically on the upside, and we're seeing incredibly bullish headlines, and then all of a sudden you're getting certain sectors, the hottest, getting setbacks, and you're also getting headlines where people have been getting enormous margin calls. So this is classic of a transition from a runaway financial bubble to eventually a post-bubble deflation in most asset prices. Very fascinating times, Jim.
Another headline that caught your eye, real estate investors are desperate to spend $250 billion. Is that a wise move right now?
Oh, I don't know. No. Some sectors in the U.S., like in certain areas, the house prices are reaching new highs. But we see that in previous great financial bubbles have been accompanied by firm commodity prices and by firm residential real estate prices. But the overriding thing is the huge speculation in stocks and bonds, and that has without a doubt been incredible. For example, when in Germany, their 10-year note got down to almost minus 1% nominally. Minus interest rates for 10-year stuff or minus interest rates for anything have never happened before. So I've been explaining to people that that's the equivalent of gold going to $30,000 or something like that. So the inflation has been in financial assets, bond prices and stock prices, with firming commodity prices. And all of this seems to be culminating at about the right time this year. So now our goal over the next few months is to watch for the identifying points in the transition from a fully fledged financial mania to a typical post-bubble contraction. And I think on the show with you, Jim, I think we'll be able to cover it quite well.
Should Canada accept 100 million immigrants? Brian Mulroney, our former Prime Minister, believes that Canada could, with a declining birth rate and having a relatively small population in the world's second largest nation. A friend of the show, Hilliard Macbeth, pointing out Germany with 63 million could easily tuck into the province of Alberta with lots of room to roam. Should Canada welcome the world with open arms? And with 100 million plus the 38 million we already have, we'd actually become a major player on the world stage.
Well, who the hell would want to be a major player on the world stage other than some burned-out retired politician like Mulroney? No. North America has been built upon population coming in, and it has to become in under the immigration rules. You want to have people qualified, but the problem is that in Canada and the U.S., the current socialist governments are bringing in immigrants illegally in order to bring in potential voters. I mean, in the 1980s, I went to a luncheon downtown Vancouver where a recently retired then deputy minister in immigration spoke, and he mentioned about 4 of the key rules in Canada for immigration requirements, and he pointed out that each one was being violated by the Liberal government, federal Liberal government, in order to bring in potential voters. Now, that was almost 40 years ago. And, of course, now with the crisis at the U.S. border with Mexico, this is intentional. The Democrats are bringing in future voters. And they have no concern. The Americans at home are being constrained from going to restaurants and sports events and churches, are required to wear masks and can't move if they've got the virus, whereas the immigrants coming in from south are not being screened at all. They're just coming in. So the Democrats get 2 things out of it: future potential voters, plus another chance at getting another spread of the virus in which they can then come in with more controls. It's very evil what's going on out there, and we should save this one for future discussion.
Another headline that caught your eye, we are on the road to $100 a barrel oil.
Oh, yeah. That one was only a couple of weeks ago. Again, that's the old inflation story going, where 1970s story where the world discovered that central bankers were evil, their practices were evil, and they were going to depreciate the dollar forever, and commodity prices would go up forever. But they don't understand that once you've had a period of booming commodity prices and they crash, then you end up with a period of inflation in financial assets. And this is clear that we have inflation in financial assets. So what has followed, and this is 300 years, and there have been 5 previous great financial bubbles, the last one being 1929 of the classic kind, all have been followed by lengthy periods of price deflation. Most everything deflates. The only thing that turns really good is that everything deflates relative to the price of gold. So gold's real price goes up, and making gold mining a very profitable industry in a post-bubble deflation. So we're looking for this to become more evident later in the year.
Bob, thank you so much for being on This Week in Money.
There we are, Jim. Good to be with you, and we look forward to getting together again next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He was speaking to us from Vancouver. Coming up, Mark Leibovit, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Mark, can you tell us a little bit about VR Trader and your background in the media and giving financial advice, or at least financial opinions?
How much time do we have?
Forever. Forever, Mark. For you, forever.
It's a long story. I don't even know where to get started. I mean, how to get started? I think I went over this before. I was in college, and a friend of mine's uncle was a partner in a commodity firm in Chicago, and I was living in Florida. And he said, "Hey, this is going back to the early 1970s," and he says, "Hey, they're launching this new thing called the Chicago Board Options Exchange, and they're selling seats, really, for $10,000. And I said, "Boy, what's that all about?" And those calls and puts are calls, and usually options are over the counter. There's never been a market, a physical market, trading market for options. It's always been a negotiated market among brokers and clients, and so it's a new thing. So I said, okay, I don't know anything about it, except I like the stock market, the idea of the stock market. So I fly up to Chicago. And being from Florida, that was a tough move for me, because I'm a warm-blooded person, and maybe that's why I'm back in Arizona now, or in Arizona now. But it was pretty nasty up there, the weather. But I got to take a trading exam. Had to go through a clearing firm to set up an account. You had to go rent a seat if you didn't buy one. And the seat rentals were very, very cheap. Fortunately, my friend who sent me up there, he had a seat that I was using, but a lot of people were just buying a ton of these seats, and of course they went from 10,000 to, I don't even know how high. I know they went to at least 1 million, but maybe more. Some smartest people I know loaded up on seats, and they just rented them out. It was like a well-kept secret. You could rent out your seat, and generate cash flow just like any piece of property. The problem is whoever used your seat could hold you could be held liable for some of their bad trades. You had to make sure you had a clearing firm that watched that person's trading so that he doesn't go crazy. I know one instance where somebody rented the seat out. The guy went overboard on the floor, went into debt. They had to physically go down the floor, take him off physically because he was losing money, and the clearing firm's job was to sort of stop that bleeding. So anyway, I went to Chicago and went down on the floor. It was interesting times, Jim. You know, this is the days of Hugh Hefner and Playboy and the Bunnies. And we're probably not going to cover the whole story here. We're just going to talk about part of this one event in my life. So, you know, the Playboy Mansion was down the street, you know, maybe like a mile or two down the street. There's the Playboy Towers there, and a lot of girls applied for jobs as runners who are bunnies on the floor of the both on the Board of Trade, which I believe was upstairs, and we were downstairs. And so, you know, it's basically a male enterprise at the time. I'm trying to think how many guys are on the floor, maybe 1,400. We're down in the pits, in various different pits, because you had different stocks that you became a market maker in. Later on, a few years later, they added the NASDAQ 100, the OEX, and that became the biggest pit. But at that time, there were only call options. There were not puts. But these girls would come into the pit, and as you can imagine, knowing that they were a bunny, trading would stop as these girls would deliver messages into the pits. And I wouldn't say they were harassed or teased to any unusual extent, but there was a certain amount of that going on. And that was a fun time. And I remember another time down there, there was a drug bust, like the FBI was at the steps as you walked out. They were checking everybody for drugs because somebody was doing something with drugs on the floor or selling it, and they stopped trading for that. And so, you know, the experience down there was you got to learn a little bit about manipulation in the stock market, because I would see times where brokers representing some big firms would come in, and they would start loading up on call options, and the stock's not doing anything. And you're just standing there. Usually what the market maker would do is if he has to sell a broker a call option, he's naked short, so he's got to buy the stock to hedge his position. So that generally is a protective measure. But what you noticed was that these guys are coming in buying options, calls at the time, and then the next day or the day after, the firm that they work for, and I don't want to mention names, it's one of the bigger firms, would come out with a research report on a stock, and sure enough, it would go up. So they knew it was coming. And that was the first lesson that, you know, things are not necessarily on the up and up. Of course, you know, this is the nature of Wall Street, so this is just one of millions of examples. And other guys were some big traders. I don't want to mention names, but they're pretty famous. They would they had an uncanny sense when certain stocks on the New York Stock Exchange were very thinly traded, or thinly, you know, there was very thin action in them, and you could move them with very little price, I mean, with a very, very little volume, you know, in terms of buying and selling, you could move the price easily. So they would load up on the call options, and then they would disappear from the pit. And you would, if you had binoculars, you could watch them on the edge of the corner of the floor as they're picking up the phone and calling their brokers in New York and buying the stock, driving it up, because they knew they could drive it up at that moment. And sure enough, they come rushing back into the pit. The stock's, you know, a few points higher, and they very readily sell their call options. They made some nice money. So you have, you know, it's like learning the lessons of Wall Street, and nothing has changed today. It's you know, it's all the same game. People know stuff ahead of other people. It's free world, free enterprise, and frankly, I don't hold anything against it. I mean, I just think that's just the nature of human nature. You know, if you see an opportunity, you can take advantage of it. You're out to make money. You know, there's nothing illegal about you buying and selling. If you got an edge and you could figure it out, and you know, that's just the nature of, you know, it's like anything in real estate. You know, the city council is going to approve some rezoning, and you have to overhear about it. And you go buy some real estate around that area, and sure enough, you make money on that real estate. You got privy to some information. I guess all your hard work and effort is worth something. So remember, I don't know if it was Milton Friedman. I think it was Milton Friedman, because he came out with this report way before he had passed away, Jim, about how he was against insider trading. He said insider trading should be legal, and I've sort of held that view. Of course, that's not the prevailing view. Everybody thinks insider trading is bad, and they go after you. But he wrote a whole paper, and I respect Milton Friedman, probably one of the greatest economists ever, and he just thought that it was, counterproductive, anti-capitalist. You should be rewarded for your efforts, and if you're smart enough or courageous enough to dig out information, whether it's that you find out some real estate's going to be rezoned and you can make money, or you have to hear or talk to some executive of some company about what that company is doing, that was because you put yourself or got yourself in a position to obtain that information. And the average person has to work to do that. They have to either get a job, be in the right place, have a certain education, or they have to have a certain job function in a certain place that puts them in that position that they can even obtain that information. So it's a function of your own success in life or your motive. And he sort of felt that eventually these laws would be changed. And I agree with him. I think it's all nonsense, because everything in government, everything we hear and see in the market is all inside information. But if some schnook happens to talk to somebody at the wrong time and they want to make an example of him, they do it. And the biggest guys, over how many U.S. senators and congressmen have made tons and millions of dollars on inside information and all these documented stories that they find out about stuff, and supposedly they were exempt because they were elected officials. I mean, it's such a joke when you think about how the regulatory environment has gotten to that point where, your freedom is being curtailed. Of course, now we find out our freedom is curtailed in other ways with the virus nonsense and trying to, control population and your freedom of movement and your rights and on and on and on. So it's we go on for hours with this conversation. But I didn't tell you my whole story, but that's part of it. Maybe another time we'll talk about what else happened in Chicago after I got off the floor.
Mark, can you tell us about VR Trader? What does VR stand for, and how does it work for you?
It's volume reversal. And I studied with a technician when I was very young, in my 20s, who showed me volume patterns, and his name was Roger Cole. And he sort of, created the basic concept for it, though I did a lot of work in the years to improve it, expand on it. But basically it says that volume precedes price. And if you get a shift of volume off of a bottom, stock down, and suddenly volume comes in off a bottom. This is a very rough definition. I call it a positive volume reversal. And other times, stocks are high and they're coming off of the top, and volume suddenly increases. I call that a negative volume reversal. So what it is price is coming down on increasing volume for the negative, and price is going up on increasing volume for the positive. And over the decades, I have to tell you, it's uncanny in calling, both short and near-term moves in the market. Sometimes they're 1 or 2 day moves, but sometimes on the weekly and monthly charts, they're multi-month moves. So the idea is that smart money is identified by the size of the volume and the price action, but you want to catch it ideally off lows and highs. I must say it works all over the place. I mean, I use it all over, but these are where you make key spectacular calls, coming right off bottoms. And I guess I saw a lot of this when I was floor trading, when you see volume come into the stocks. So that's the bottom line. And so I use a lot of other technical indicators, like everyone else. Not that many, but primarily I look for the volume shifts. And somebody says, "Hey, watch this stock. This is a good stock to watch." So I put it up, and if I see an extreme move up or down, ideally, or I see it trading along and some volume comes into it, and it looks like there's enough support under the market that you don't have a lot of risk, I'll recommend that. A couple we had on our list yesterday in our newsletter, the VR Platinum letter, and we took some nice trades in those. But what's interesting about the volume reversal, Jim, is it's usable in all different time frames. I have clients who use it on 5-minute charts during the day for the S&P, and I don't trade that way. I'm too old for that. 5-minute moves are just, That's enough. Daily charts is what I look at. But apparently 5 minutes, 30 minutes, 60 minutes, weekly, monthly, you can see the shifts in volume, and there are ways of, capitalizing on that if you focus on that. So the key is you really got to focus. So if you're focusing on 5-minute charts, I would just say trade that S&P futures or whatever you're in. Don't look at anything else because, the action is just too fast, and you got to be able to move quickly.
Do you have a special offer for our listeners this week?
I do. You have to remind me. I think we did the. Did we do the quarter or 50% off last week?
It was a quarter. It was a quarter off.
All right, we're going to stay quarter off then. So it's 2021 quarter off, 2021 quarter, QUARTER off. Let's actually spell it out, 2021 quarter off, and you insert that in the little promo code box on the order form. So any newsletter you go to, and we've got the metals resource letter, we got the cannabis report, the Canisector report. We've got our VR forecaster, which is our forecast model for the year. We've got the Trading Ace, which provides day trades, and the VR Platinum and the Silver. And we have all kinds of goodies up there. We even have the blockchain letter where we talk about all the cryptos. So any of the letters you go to, whether it's for a monthly, quarterly, or annual subscription, if you enter 2021 quarter off, you get 25% off.
The Dow keeps hitting new highs, the most recent over 33,000. What do you see ahead for the Dow?
Well, I'm a little bearish for the year, but we're in the seasonal positive period. I think I did a little research on this. I believe it's the last 13 out of 14 or 14 out of 15 years that April was up. So the odds are that April will be an up month. Of course, there's that adage, sell May, go away. Sometimes it comes in late April, mid-April, early May, but this general time frame, so we've got to keep an eye on that as well. But the odds suggest that there should be some positive action here in April, and then I get more bearish as we get closer to May. And in theory, from that point, you can see a lot of choppiness, if not a downward move into the fall. Of course, individual stocks are exceptions, and there's always trading opportunities. But short term, even though we have Easter coming up and so forth and so on, that has nothing to do with it other than it's a seasonal pattern. And if we take out recent lows, then that pattern is not working this time of year. So it's a trading comment. It's not for long-term investors who would be in the market regardless.
What's going on in the small cap market?
I have to look at my Russell 2000 chart. I don't have it up in front of me. I'm not at a screen right now. I know it was doing better, and then it became weak, suddenly became weak. I'd have to I have to pull up my chart on it. But basically, all the markets would apply to this seasonal pattern. The Russell, the NASDAQ 100, the OTC stocks, the Dow, S&P, total stock market index, theoretically, mid-cap, theoretically, they all should show some resiliency of some kind during this period. But I know that the small caps, the Russells, were outperforming other stocks for a while, and they were doing better when the big names like the Apples and the Netflixes and so forth, and the big NASDAQ names were coming down. It just seems like there's a rotation. Money managers decide, hey, we want to get out of the high flyer NASDAQ stocks, so we're going to go into the so-called undervalued Russell 2000 small cap stocks, and then for some reason the Dow Industrials is underperforming because they're focusing on these others, and then they start to underperform, and then the Dow starts to come back, and they say, oh, gee, we want value, we want the big names, so we're going to go back to the Dow. So my overall opinion is you got to be cautious this year. The January barometer was down, which is an indicator that Yale Hirsch created back in the 1970s. It was down. The January was down as compared to December, and that's a warning sign for 2021. It doesn't mean there's not going to be ups and downs in trades. So overall, I would be in and out of the market relatively aggressively this year. And if we're up in April, fine. So regardless of which sector, which of these various sectors I just mentioned, I'm not saying biotech stocks versus gold stocks versus cannabis stocks. I mean, they all have their individual trades along the way, but in terms of the entire market, that would be my impression. I'd be cautious for the year. Little lights, I think, here in April, and then we'll see what happens if we get this sell may go away and how the market responds during the summer, and we'll take it from there. But we're always looking for trades. You know, there's always going to be a bull market somewhere, is what Jim Cramer says. So we're always looking for something.
Are interest rates likely to be a big story going forward?
They already have been. Short term, they seem to be backing off here a little bit. So I actually was long the inverse ETF for the bond market and long the dollar because they seem to move together. So when bonds are going down and rates are going up, the dollar also tends to go up. But we sold them on a trade thinking with this April recovery that I just been ranting about, if stocks do better, they might do better because rates are backing off. The dollar might back off a little bit, which means gold will go up a little bit. So it'll be a little like a relief here. Like a change of direction for these markets for a short period of time. So with that thought in mind, I think they'll back off here a little bit. But it overall appears there's a sea change here that rates have changed. I mean, now we're maybe entering. I don't know if this is a lifetime type signal or so. I'm trying to think of the expression. The expression they use, generational. That's the term the big boys use. Whether this is a generational switch in trend, which means that rates have been declining from the 1970s, 78, 79, basically overall until for about 50 years, and maybe that's changed. And if that's the case, it should be real interesting times going forward. It's way too early to say that's happening for sure. It could be just a temporary uptick. I know the Federal Reserve doesn't want to see rates go up, and they're buying bonds and doing all this crazy stuff to keep things down. But the futures traders and all the traders have been upticking the rates, thinking that rates have to go up, and the Fed ultimately has to catch up with the real market, and they're going to change their opinion, even though Powell at the Fed says he's still going to keep his zero interest rates, and nothing has changed. So it should be interesting how it unfolds. But the big charts sort of indicate that maybe there's a generational change unfolding, which means in the months and years ahead, we'll look back and say we've seen the lows.
How is the U.S. dollar looking?
Same thing. Way overdone. It bounced, and I don't know if it's going to continue its recovery or not. It's cheap enough that it should, but if rates start moving up, the dollar will go up. And so we may have seen the lows in the dollar. So, and that's not good for gold or for current commodities because they're priced, as you know, in dollars. So I'm sure there's going to be exceptions. I guess lithium and palladium and things they need for the high-tech cars are probably going to do okay. And I think we still need copper and, rhodium and these other things where they're going to have a big impact if the dollar is strong or not. Depends how much demand you get for these individual metals, and some of the rare earths out there are going to be needed. So it's interesting. Let's see how it all plays out. But the dollar theoretically should, if rates resume their uptick, should go with it. And we'll see how that unfolds. That seems to be the pattern now.
What do you see ahead for gold?
In February 1, at the World Outlook Conference in Vancouver, I don't know where gold was at that moment, but it was much higher than it is now. I said we're going to see 1,500 in gold. It's based in U.S. dollars before we see 3,000, because everybody was looking for 3,000. So far we got down to about the mid-1600s, and maybe that was close enough, maybe not. Seasonally, we tend to have a weakness into the summer for gold, but more for silver. And everybody's bullish as heck out there. And that worries the heck out of me. And there's still, unfortunately, a lot of manipulation in the gold market. GATA.org, GATE.org. Bill Murphy, that whole group, has been documenting for 2 decades all the manipulation in the gold market, how it's suppressed intentionally. Otherwise, if that didn't occur, gold would already be $3,000, $4,000 an ounce. Governments don't like to see gold up because it questions, how successful they are in monetary policy, and so it's to their advantage, and it's absolutely manipulated to a degree which is beyond even other manipulation which goes on every day in the market. So they suppress it, and I'm not the expert on this. You got to go to BillMurphyGatta.org, read his stuff. If you want to donate some money to his organization, he could certainly appreciate that because he does a lot of research in terms of it's not a money-making enterprise. He does it to document what's really going on out there. So, with the suppression of gold and all those other goodies out there, and if the dollar, starts to rally some more, gold may surprise the bulls here. It may be a lot weaker than they think is possible because logic doesn't apply, when you've got manipulation and government suppression, and particularly if you think an inverse relationship exists between the dollar and gold. So I've been cautious. I traded. I actually went long a little bit today because it looked like a bounce for a little bit of a bounce, and it might bounce here a little bit short term. My thought is it's probably go down again into the summer, and we'll see where it is, and we'll make a judgment. I mean, at some point, I guess there could be a nice rally. Maybe whether it get back up to that 2060 high or not, I don't know. It's too early to tell. But I'm not a big buyer of it here, just trading it. But my overall view wasn't that positive for this year.
What do you see ahead for silver?
Same thing. Ditto. Same pattern. Pretty much the same. Silver's actually weaker into the summer on the seasonal pattern. Everybody and his brother said silver was going to skyrocket, and the Reddit people, the Robinhood people, Wall Street Bets people, all looking for silver to go to $5,000 an ounce or some crazy number. And I think silver has a lot of other uses. I mean, it's really a great metal. I mean, when the pioneers crossed the West in the previous couple centuries, they put silver coins in their water barrels to help kill bacteria and viruses. Very few people know this. Silver is actually a medicinal element, and gold. Historically, I have this whole piece in my metals resource letter. It was viewed by the ancients as a healing metal. That what you actually should wear the gold because it has healing properties to it. It has more value in being on your body and healing you than in terms of monetary significance. And I usually, I try to put some gold coins in my belt or something, hang around my neck, because I sort of believe that. I remember years ago I was in the Chicago airport and I ran into Mr. T, the television star, wrestler, and
I pity the fool.
Right. We were at the picking up our bags from the checkout counter, and he was standing next to me, and he had it was about 5 tons of gold hanging on him, and I said, boy, this guy must be one of the healthiest guys out there, because even back then I was aware of they're called medicinal properties of gold, and the ancient civilizations, how they relished it for that reason. So, but that's sort of a tangent off my silver story. So silver has a lot of medicinal value. So I like silver for other reasons, not because they use it in solar panels and other things. I think silver is one of the most undiscovered healing metals in existence.
Bitcoin traded above $60,000. What do you see ahead for Bitcoin?
I'm sort of on the fence there. All the smart people that I know for years have been telling me it's going to 100,000. And one of the smartest that I know, and I'm not mentioning names, but he actually came out with a piece the other day. I almost fell out of my chair when I read it. $500,000 to $1 million for Bitcoin was his prediction. Now, he's not telling me 3 months or 3 years. He's not giving me a time frame. And then we hear Janet yelling at the Treasury telling us, oh, this is illegal. We got to stop the Bitcoins and all this stuff. So that's known as jawboning. The Fed and the Treasury are good at doing that. They open their mouths and they say things, try to affect the markets or change direction of things when really they have no authority to do anything. And if they think they could stop Bitcoin and crypto, they might as well get their heads examined. So it's not going to happen. They'd have to shut down the internet completely. There is free markets around the world. That's what people created these things so they would be out of the government purview. We don't want government. We hate government. Government are a bunch of idiots that make mistakes, spend our money the wrong way, and do stupid things like open the border in Mexico, or I mean, they're just, they should, honestly, I don't know how we got ourselves in a situation relying on people that are incompetent. So anyway, the crypto is just part and parcel to that, as part of this rant, they're not going to stop it. So maybe Bitcoin could go to 500,000 or $1 million when we lose faith in our governments and we lose faith in our currency. And they want to digitize everything. The government like to control everything, take all your money in cash and digitize it so they can see what you're doing and monitor to you every day. So people want their freedom and independence, and Bitcoin and all the other cryptos are an expression of this. And maybe the government's going to create their own cryptocurrency at some point, and maybe they'll try to outlaw it, but it's like saying getting rid of guns. It's not going to happen. You can say get rid of guns. It's not going to happen because people want to protect themselves physically, financially, and, otherwise there's going to be a civil war. And unfortunately, that's also in the dark and dismal future based on the way governments are conducting themselves now. But we can get into that another time. But yeah, Bitcoin could still be a big surprise here, and I would not be surprised if we saw 100,000 in Bitcoin over the next year or two.
Could cryptos end up being the modern day version of tulips?
No. That comparison is being used because there's nothing you could do with the tulip. You couldn't, I don't believe you could trade it and use it in the way that you can digitize the cryptocurrency. The tulip dies, it has to be watered, taken care of. It's not a permanent transferable commodity. It's not a currency. I guess has some currency value. I guess people would trade a tulip for a house, I guess, at some point. But the tulip ultimately would die. I don't think it lives forever. So the currencies do, because they're electronically embedded, and they're a medium of exchange. And I think the bears and the people who don't like the cryptos, and particularly the gold bugs who don't like the cryptos, because a lot of money from that would have been gold went into the cryptos, they're bad-mouthing it, Jim. So I think it's here to stay. All the young people are into it. It's a new generational thing. Yeah, the old farts like us. Not you. You're not old enough. But guys like me are in their 70s. The old farts out there. They don't like it. Maybe they do like it. Maybe some of the old farts do like it. But anyway, this old fart loves it.
Do we have any geocosmic events that could affect the markets?
I've been watching the sun the last few days. There's some solar spot activity. I had this whole video I put on my website about the size of asteroids and what they could do to the Earth. And I have this theory, and I still have it. And, people listening to this broadcast, they say, who the hell is this guy? This is, House Street Radio's got this nutcase on the air. But, I think the whole COVID thing is related to some extraterrestrial event or something like that, whether it's an asteroid, whether it's an alien invasion. I'm talking about people from another planet, or a dimensional issue, or there's a geocosmic issue here on the Earth itself, whether it's volcanic activity or something. There's some planets that are moving around out there that possibly shouldn't be there. They could be exerting magnetic forces on the planet. There's some unusual earthquake activity recently. And in my newsletter, I posted pictures of these double sun images, like there's something else in the sky besides the sun. And at first I thought, they're doctoring up these images, and this is just, a guy playing with his paint program and putting images up. And I keep getting over and over again these images. There's something circling the Earth, or there's something out there that we don't see all the time. It's almost like it's a second moon in the skies, and it's not really a second moon. No one's talking about it. When I send pictures of this to astronomers, I don't get responses. Like I'm some nutcase, so they don't want to talk about it. There's something going on, and my feeling is the COVID event is somehow tied to this to control population, because there's something else coming. In other words, the other shoe is going to drop. And we have to be prepared, so they got to get us wearing masks. They got to do something. to get us under control, that we respond to them like, oh, yes, government, we'll do whatever you say, and we'll stop going to restaurants, and we'll wear our masks, and we'll stay at home when you tell us to. So they had to condition us, and I believe this is just speculation on my part, but there's something rotten in Denmark, and there's much more to it, and when I see these geocosmic things going on, and like I mentioned this asteroid thing, I'm not saying an asteroid's coming, though there's a website I put on my newsletter. Everybody can track all the asteroids and how far they are from the Earth. You think they're going to tell us if an asteroid is going to hit us? I'm wondering if they would even tell us. They would make us happy. They send money into our checking accounts like they're doing now, $1,400 to people. They run the stock market to new highs so everybody thinks they're wealthy. And then the asteroid would hit and kill us all. You think that would make sense? Why warn us and create panic if something negative is coming? Make us happy. Feed us, give us money, everything is great, legalize marijuana, everybody, free sex, everybody's happy out there, and then boom, you're dead. So, there's something going on, and whether it's that scenario or something else, but this is a plan in place by the powers that are way above any powers that you think that really exist, secret government, whatever you want to call it, and this is happening. My gut, it's my intuition. I've been around a long time. I've heard and seen a lot of conspiracies. But this is something over the top, and I think the top people and all the top governments know this, and they're preparing their populations for something that's coming. And so I suspect 2022, 23, the next 3, 4, 5 years are not going to be so great. For some reason, whether it doesn't have to be the virus, it could be something else, like I'm saying, or maybe it is another strain of the virus, or we're going to find out. But I would say enjoy things as you can enjoy them, and take every day and enjoy your day, enjoy your life, because I think we just got a first taste of what things could be like. That the COVID thing is just the ice, not even the ice, is like the first layer of a multi-layer cake that's being baked for us. So we'll find out, Jim. So you heard that story. So I'm very dubious about what's happening out there, and trading the market, try and make a little money, put some food on the table, travel a little bit, have fun. My dad made it to 77 years old. I'm 72. Because I believe, like Moses, we can make it to 120. That's what it says in the Old Testament. But I don't know if they're going to let us live that long.
Where can people access your special offer?
Do they want to after hearing this interview?
Well, it's special, and we have to take advantage of stuff while we're still here, Mark.
Right. Okay. It's vrtrader.com. vrtrader.com. By the way, I was the #1 market timer, as you probably said, last year, or 2019, not the year before. And you go to the home page, and you pick your newsletter, and you enter that promo code that I mentioned earlier, 2021 quarter off for any of the newsletters you'd like to buy. But that's cheap. It's not the cheap. That's a cheaper offer than the other one. We used to have it was more expensive than paying full price, I should say. But as far as the access, that's tongue-tied here. Versus going to Leibovit VR newsletters. That's too long to type in. Just go to vrtrader.com. It's a shortcut. Thank you for mentioning it.
Mark, thank you so much for being on This Week in Money. My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. He was speaking to us from Arizona. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Bob Hoye, and Mark Leibovit. And thank you for listening. If you have any questions for any of our guests, you can send them to info@housestreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to Company Showcase, Larry.
Thank you, Jim.
Larry, more news releases from your office this week?
Yeah, we had an excellent release out on the advancement of our pilot plant processing and our specialized cathode reactor. And we actually have some pictures that look like balls of yarn, but they're microscopically enhanced. And so now you see what the shape of a particle of metal looks like. And but anyway, we had excellent results from that. We're still not reaching the ultimate level that we want to, but we're very, very, very close, and we're excited about that. And on that note, I'd just like to say that American Manganese has the ability to recognize opportunities when they arrive, and we certainly saw that in manganese back in the day. And then when we switched over to battery materials, we certainly used that process as the cornerstone of our battery recycling today. And that if anybody looks at the patent, we used SO2, and we actually stole that from the U.S. Bureau of Mines work back for the last 60 years up to 1980. And when they dropped that program, we started to work on manganese, and then this leads into another part of my story today, which is that we recognize that the U.S. did have manganese, that it was very low grade, and a process had to be developed in order to capitalize on it. We saw the mistakes that were made by the U.S. Bureau of Mines, and they always ended up using high heat at the end of the day, and that evaporated the water, and it also raised the cost considerably on producing a pound of metal. And I'm talking now about electrolytic manganese metal or electrolytic manganese dioxide, which is used in the batteries. So they were pretty much stopped there, but new innovation in filtering allowed us to move this thing through, to get rid of the high heat, to get rid of the bad guys that were produced when you were actually processing it. And we came up with a solution. We actually had a big Japanese firm that was willing to come to the program and become a joint venture partner, and everything was looking good. We were on our feasibility study, and of course, as you all know, the price of manganese destroyed that. So that raises a question: the price of the metal. Well, you look at the price of metal, and it has stopped many feasibility studies. It has stopped many early producers because you couldn't make money at the lower price. And but we're not looking at that so much in the battery innovation. The battery, we just take a pound of cathode material and put it through our total process, get it off of the aluminum, and then run it through leach tests and now through morphology, and we end up with a product that the battery manufacturers want. And that's important. You've got to have the product they want, or else you're selling at the lower end, which is the same price as the commodity itself, and it's probably just going to go into all kinds of various applications. So the idea is to have this from cradle to grave, and we're almost there, and we're pretty happy about that. And that leads us into the molybdenum that I got involved in back in 2003, and we took that product from drilling to a permitted operation with the government, deals with the natives, feasibility studies, and actually permit to operate. And but we were the first ones out there, and all I'm bringing that up for is that being first is a lot of hard work, because everybody else follows in your footprints, and they don't have to shovel the snow. So but it's a good place to be. At least you know that your instincts were right, that your calculations were right, and this was the area to go into, and that's how we ended up in the battery recycling. So it's not as simple as it looks. It looks good when you look at the press releases and everything, and it's a process, but there's a lot of R&D involved. There's tens of millions of dollars of R&D that has to be spent to do it right. And yet I'm seeing guys that come off of the blueprint and say they're going to build a recycling plant, and they haven't done a thing about their process. They haven't done a thing about they have. They can shred this stuff now, but that entails a pretty sophisticated method to get that cleaned up, so it can go into a metallurgical process. And but it's being the leader of the pack is not necessarily the best way. If things had happened a little earlier, maybe we could have still got the patents. And but we'd be still in the back behind the process that we're doing today. So in order to do these things, you have to have connections with the right people, and we have great connections with Cametco and their CEO, and he is basically independent, but he's got a way of seeing around the corner and knowing things that will work, and knowing things that could produce some profits down the road. And that's what we're all looking at the end, not just the green solution, because you can't gift the world with a green solution if it's going to lose money, because that's not a solution. You can't, if you can't make money, you can't produce a product. So we look at ours. Nothing much has changed from the back of the envelope that we used in 2016 to look at the value of the cathode materials and batteries, and then turn that into a solution, and which we've done. We're almost there now. We've just done an MOU with a big potential battery manufacturer, or gigafactory in Italy, and they're very ambitious. They want to be at 71 megs in about 3 or 4 years from now, and the first one is 45. So it's a good place to be. If everybody's wondering where the plant would go, well, that would be a good guess, but it's not necessarily mean that we would have the plant there. We could have 2 plants starting, because we're also looking at bringing in joint venture partners that will fund the first plants and for an interest in the project. I mean, we've spent millions of dollars, well over $10 million on our process, and if you wanted to add in the manganese, you could be looking at up to $25 million that is spent on this effort. It's not something that you cook up in the kitchen. It's something that is R&D, research and development, is trial and error, and you have the right ideas and everything, but you don't have the right mix, you don't have this, you don't have that, so there's a whole lot of millions of dollars worth of R&D that has to be done in order to finesse a solution. So we're happy that we've got Cametco to do that, and I thought a little bit of history would make a little bit of sense on in the last 2 decades, we've had 2-3 innovative products, and now we're coming down to the final stretch on our recycling. We don't publish timelines anymore, because a timeline is also a timeline for predators, and so we stay away from that. Plus, with COVID and everything else, there's always interruptions, and if you don't meet your timeline, like we did on the molybdenum project, we met that timeline, beat it for that matter, and but it was a different time, different place. There was no COVID around. There was no distractions that could sideline the project. So today with COVID, you making a timeline is just a guess, and but we figure that we'll have a commercial plant within 2 years, and the location we will divulge at some point. But we're pretty happy with the progress that we've made. We're not happy that the market has kind of slowed down on us, but I think that's temporary, and which probably in hindsight, somewhere down 2 or 3 months might say, "Geez, that was a good buying opportunity." But you have to pick your spots. I can't tell you where the spots are, and we're just hoping to see our shareholders rewarded down the road, further rewarded. Right now, they're probably up about 800% from the 20-cent mark, and that's a good place to be. And we seem to be settling in here at the $1.50 to $1.60 range. So, I don't know how long that will go on, but I'm hoping that we'll break out of here sooner than later. I see signs in the market that there could be a breakout, and but I can't put a timeline on that either. But I don't think it's that far away, and I think everybody should be pretty happy with the results that we keep putting out. And we're also, of course, working on manganese again on the stockpile, and there will be results forthcoming on that. And so we've got a full plate. The company is well exposed to all kinds of things, including base metals and precious metals like copper and gold. I couldn't think of a company being in a better position, and we are in a great position to do what we do. And, of course, we seem to be the map for everybody to follow. I notice that we go after scraps. Now everybody's going after scraps. And, but we try to be transparent. The fact of the matter is that nobody was talking about scraps a year ago, and except us. And we recognize that opportunity very early, and because it sidesteps all the shredding and everything else you have to do. So, Jim, it's been another week of further advancements, and now we're coming up to a long weekend, and I wish everybody a great long weekend.
Larry, for people new to American Manganese, where are you traded, and where can they get more information?
We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZFQB, and we're traded on the Frankfurt Exchange under the symbol 2AM. You can find information on our website because it's very transparent at AmericanManganeseInc.com, and you can contact the company here or myself here at Reaugh, L-R-E-A-U-G-H at AMYMN.com, or you can phone at 778-574-4444.
Larry, thank you so much for the update.
You're welcome, Jim.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on April 1st.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.